Hi guys, this is OG from Crypto Knights. Welcome to the Crypto Knights trading course, where I will go over how I trade the markets using technical analysis. In today's video, I'll go over how I identify key price levels or zones where I will look for potential trade setups. It's important to identify key price levels because you don't want to trade in no man's land. It is also important because you can gain experience and consistency by trading from the same types of levels. So let's get into it. We'll start out with a blank chart, and by the end of this video, we will mark it up with all the relevant trading levels. First, really important, start out with a blank chart. This is critical because you don't want to be biased by previous technical analysis or other levels you have marked out on the chart from before. The levels that we'll be going over today are the following. 1. Key support and resistance. 2. S&R flip or support and resistance flips, the 61.8 fib, the 200 MAs, and any other patterns such as triangles, channels, double bottoms, double tops, head and shoulders, etc. Let's get started. So first things first, we'll look at support and resistance. So the first thing you want to do is just reset the entire chart, right? And then you want to scroll out a bit until you have about, let's say, 200 or 300 candles that you can view. And I'm going to just zoom in like this. Okay, once you're here, we can start marking out the levels. So with support and resistance, it's very clear. Support is just the lowest swing low you see on the chart, which in which case is here, right? So at around 1863. So we'll mark it like this. Resistance will be the highest swing high you see on the chart, which will be here, right, at around 2408. So we'll mark it like this. I'll turn it to red as to show that it's resistance. Okay, second thing, support and resistance flips. So what this means is a level that has, so any support that has been broken could potentially become resistance and vice versa. And so while looking at this chart, and I actually mentioned this in yesterday's video, but looking at this chart, where do we see an SR flip? We see it right here, right? So we had this leg down, so this is a swing low, consolidated, broke below it. Now this becomes a potential area of S&R flip, right? Because it used to be support. Now that once it's been broken, then it could potentially become resistance upon a test, right? And so this is exactly what we had here, right? So I'll mark this like this, and what I do, and this is just personal preference, is I will change the style for it to be dashed so that I can differentiate an SR flip from resistance, right? So this is an SR flip. And we actually see, right before we even get further, we actually see that with price did come back to test this level and had a huge wick with strong volume. And in yesterday's video, I actually said I'm going short here because of that, right? So, but moving right along, the next thing we want to look at is the 61.8 Fibonacci. So if we take the Fib tool, we pull it from the high to the low, and we might pull it from the low to the high if we were in an uptrend. But since we are seeing it a downtrend, we pull it from the high to the low. And here's the 61.8 Fib at roughly 2200. If we actually go into the Fib retracement settings, we see that there are other levels, right? Such as the 23.6, the 38.2, right? The 50, right? And then the 78.6. We also have fake extensions, but we will not get into those in today's video. The reason why I only check the 61.8 is because throughout my years of trading Bitcoin, Ethereum, and crypto in general, I found that that's been the most reliable level to trade from. The 38.2 has been the second highest level of success, but over the years, I've just come to narrow down to the levels where I have the highest level of success. So even though the 38.2 is pretty good in terms of giving high probability trade setups, it's not as good as 61.8, and so I don't look at it either. I try not to complicate my charts too much and only focus on the key levels. Okay, so that's the 61.8 Fibonacci. The next thing I look for is the 200 moving averages. And for those of you who have been following my videos, 3 and 4 are the key things that make up the majority of my trades. Right, the majority of my trades are trading the 61.8 and the 200 MAs. So in this case, I have the blue line and the green line. The difference is that the green line is the 200 SMA, or the simple moving average, and the blue line is the EMA, the exponential moving average. The main difference is that the EMA will change quicker and react quicker to the most recent price action because it gives more weight to the most recent price action. The reason why I have both is because I find it to be more accurate when price tests both levels as opposed to just one. And in fact, if it were to test only one, I found that price has been more accurate when it tests the EMA versus the SMA, all right, at least on the lower time frames. So for example, right here, right, it tested the EMA, the blue line, had a huge wick right to the downside, strong volume, and we had a nice run up. Same thing here, right? We tested the EMA, but we never made it to the SMA. We bounced and we had a nice rally, right? And so I typically either trade when price tests both, or if a price tests the EMA. If it only tests the SMA, I typically either pass it up or I go in with a smaller position than normal. Okay, so that's the 200 MAs. And so what I do is I use the region between the two to identify a zone, right? And so in trading, you don't, because it's both an art and a science. I don't look at levels as exact price levels, right? I look at them as potential zones, right? I'm not looking to short at exactly 2201.02, right? Price could be slightly lower or slightly higher as long as it's within the zone, right? And so this is another reason why I look at both the SMA and the EMA, because it naturally forms a zone, right? Because there's two lines. And so with the zone currently, right, if we take it from the SMA to the EMA, it's around, let's call it 2075 roughly, up until 2110 roughly, right? And one difference that the 200 MAs has compared to the other levels is that it's dynamic, right? Because it's changing depending on the latest price action and the latest candles. This will be changing as well. And so this is something that I will continually monitor and adapt and change based on what price action does. But roughly this is this zone here. I can already tell you that without knowing what the future will hold, that because the most recent price action has been down, that more likely than not, the 200 MAs will be trending out down over the next few hours at least, right? And so most likely by the time the price does come up to test this level or test this zone, the 200 MAs will be lower than the levels we just identified before. It will most likely be something like this, right? Maybe like 2040, 2050, right? But no, that's that. So now that we have the 200 MAs out of the way, let's look at potential patterns, right? So you're not always going to have patterns, right? But when you do, and it's a confluence with these other levels, it gives extra strength, right? And so let's see. I don't see a triangle here. There might have been a triangle in this region here, in this consolidation, perhaps, right? Maybe you could have something like this, right? Like a triangle, we broke down and we crashed lower. So this could be a potential triangle right there. But because that's already happened, it's not something that we can trade off of yet or now. So I'm going to get rid of it. But what I do see though is this. I see a falling wedge, right? So if we take this, connect the highs from here to here. So actually, to add more confluence to this SNR flip, is that when we took the resistance line from this high to this high, we created this trend line, and this was a trend line resistance. So this level here was actually the confluence of an S&R flip as well as a trend line resistance, right, which gives extra weight to this level. Anyways, going back to this wedge, so if we connect the lows as well, swing low, we sort of have a channel or falling wedge, right? And so we have touch point, 3 touch points here so far, 2 touch points here, and if this rejection here is is legitimate, then most likely than not we might come down like this to test this level, and then we might have another bounce, and like this, right? Eventually breaking out either to the upside or breaking out to the downside, right? It might do this, right? Just breaking out, but we'll have to see, right? So now, we're done, right? And so this is what the chart looks like after I've marked out all the levels that I typically mark out for my trading. And so again, to recap, we have the support resistance, right? This green support, this red resistance. We have this S or R flip, and it's in red because it's resistance, right? We have the 61.8 fib from taking the high to this low, and here's the 61.8 retracement. We have the 200 MAs, right? So the zone between the 200 EMA and the 200 SMA, and then we have potential patterns. In this case, we have this falling wedge, right? And so now what we see is, this is already happened, right? But this could have been a good place for us to take a short, right? And so there you go already, right? One trade that you could have made, a profitable trade you could have made by identifying these levels. Now, the next two levels that are on the radar are on the upside. We have 200 MAs, right? And so if price comes up here, then potentially we could have a short trade form. And if price were to come down to the support at roughly 1860s, then we could have a potential long, right? So let me actually move this down here. So that's why I have an alert set here and an alert set here, so that if price were to come up to either this level or this level, I will open the charts to see if there's confirmation for me to take a long or a short. And the reason why it's important to have these levels marked out, another reason I suppose, is because this way I don't have to be looking at the chart all the time, right? I can, now that I've done this, I can walk away. I can do other things with my life. I can work on my launch pad. So I'm actually working on a Cardano launch pad project at the moment. So I can actually work on that, and I'll only come back to this chart when an alert is triggered. And this could be in the next hour, could be in 20 hours, could be in 2 days. I don't know, and it honestly, frankly, it doesn't matter. I'll come back to it when one of these alerts trigger, right? And in the meantime, I can go about doing whatever I want to do with my day, right? So thank you guys for watching. This is the first video that I've done in this series, but this will be just the first. I'll be creating a lot more videos, going over a lot more concepts, and at the end, we will tie it all together into a trading system, right? So stay tuned, subscribe so that you don't miss out on these future videos, and thank you guys so much for watching. If you appreciate videos like this, please give this video a thumbs up, share this video with your friends, and most importantly of all, subscribe and turn on that bell notification. Thank you guys again. OG out. See you guys in the next one.